Most traders enter the market believing success comes from finding the perfect strategy, the perfect indicator, the perfect setup, the perfect entry. And because of this belief, traders spend years jumping from one system to another, searching for certainty. But one of the greatest trading psychology teachers of all time, Mark Douglas, understood something much deeper. He understood that the biggest challenge in trading is not the market itself. The biggest challenge is the trader's mind. Fear, greed, impatience, overconfidence, emotional instability. And that is exactly what I want to talk about in this video. Trading psychology that actually works, and the powerful lessons from the disciplined trader. Because once you truly understand these mindset lessons, trading starts becoming emotionally clearer. You stop reacting emotionally to every candle. You stop needing certainty before every trade. You stop allowing fear and greed to control your decisions. And you begin thinking like a disciplined, professional trader. If you stay with me until the end of this video, you will understand why most traders lose emotionally before they lose financially, how disciplined traders think differently, and how you can slowly build emotional control and long-term consistency. And if you want to continue building a strong trading mindset, consider subscribing to Bull Mindset. This channel is focused on trading psychology, discipline, patience, and long-term consistency. Now let us begin with one of the most important lessons from Mark Douglas. The market is uncertain. This sounds simple, but emotionally, most traders struggle to accept uncertainty. Humans naturally want certainty, prediction, control, safety. But the market does not guarantee anything consistently. And once traders emotionally accept uncertainty, pressure decreases significantly. Now let us go deeper. Most emotional traders want every trade to work. They emotionally depend on winning. And because of this, losses feel personal. Fear becomes stronger. Frustration increases. Confidence becomes unstable. But disciplined traders think differently. They understand trading is based on probability, not certainty. And this psychological shift changes everything. Now let us talk about another powerful lesson from Mark Douglas. Anything can happen in the market. This is deeply important psychologically, because once traders emotionally accept this truth, they stop trying to control every outcome. And when emotional attachment to outcomes decreases, emotional pressure decreases too. Now let us talk about fear. Fear is one of the strongest emotional forces in trading. Fear makes traders hesitate during valid setups. Fear makes traders close profitable trades too early. Fear creates emotional paralysis. And slowly, fear destroys confidence. Professional traders still feel fear, but they do not allow fear to control decisions. That psychological difference changes everything. Now let us talk about greed. Greed creates another dangerous emotional trap. After profits, excitement appears. Confidence slowly becomes overconfidence. Risk increases emotionally. Discipline weakens. And emotional behavior destroys consistency. Professional traders stay emotionally balanced during both wins and losses. Now let us talk about another important lesson from the disciplined trader. Your emotional state affects your perception. This is extremely important, because emotional traders often stop seeing the market clearly. Fear changes perception. Greed changes perception. Frustration changes perception. And emotional thinking creates emotional decisions. Professional traders learn how to observe emotions without automatically reacting impulsively. Now let us talk about patience. Patience is one of the biggest psychological advantages in trading. Most traders lose money because they cannot wait. They force trades emotionally, trade out of boredom, trade because they feel pressure to do something. But disciplined traders understand something powerful. The market rewards patience far more than emotional activity. Sometimes the best trade is no trade. Now let us talk about another emotional trap: fear of missing out. This destroys many traders psychologically. A trader sees a strong market move. Immediately, emotional urgency appears. What if I miss the opportunity? And suddenly, they chase the trade emotionally, usually too late, usually without proper discipline. And emotional decisions create unnecessary losses. Professional traders think differently. They understand opportunities never stop existing in the market. This mindset creates emotional calmness. If this video is helping you understand trading psychology more deeply, consider subscribing to Bull Mindset, because mindset is what separates emotional traders from disciplined traders. Now let us move into another important lesson. Most traders are fighting themselves more than the market. The market simply reveals emotional weakness, fear, greed, impatience, overconfidence. And until traders develop emotional awareness, consistency remains difficult. Now let us talk about revenge trading. This is one of the biggest emotional mistakes in trading. A trader experiences a loss. Immediately, frustration appears. Emotionally, the brain wants recovery quickly. So the trader forces another trade emotionally, then another, then another. And suddenly, one small controlled loss becomes a large emotional disaster. Professional traders think differently. They understand emotional recovery matters more than emotional reaction. Now let us move into real trading examples. Imagine a trader who experiences 2 losses in a row. Immediately, self-doubt appears. Emotionally, they feel pressure to recover quickly. So they increase risk emotionally, force trades impulsively, and suddenly, small losses become major emotional damage. Now imagine another trader in the same situation. They experience the same losses, but they slow down emotionally, review calmly, protect discipline, protect emotional stability. This mindset creates long-term consistency. Now let us consider another example. A trader experiences a strong winning streak. Excitement appears. Confidence slowly becomes overconfidence. Risk increases emotionally. Discipline weakens. And eventually, profits disappear. Now imagine a disciplined trader. They experience the same success, but behavior stays stable. Same patience, same discipline, same risk management. This emotional consistency creates long-term growth. Now let us talk about another important truth from Mark Douglas. You do not need to know what happens next to make money. This mindset changes trading completely. Most emotional traders desperately want certainty, perfect confirmation, perfect prediction, perfect timing. But disciplined traders understand something important. A good edge only needs probability over time, not perfect prediction. And once traders emotionally accept uncertainty, trading becomes calmer mentally. Now let us talk about discipline. Discipline means following your process even when emotions disagree, even when frustration appears, even when boredom appears, even when fear appears. Discipline is not emotional excitement. Discipline is stable behavior. And stable behavior creates stable results. Now let us talk about another important truth. Most traders depend too much on motivation. They feel motivated after watching trading videos, confident after profits, inspired after winning streaks, but motivation is temporary. Professional traders rely more on routines and discipline than emotional excitement, because emotions constantly change. Now let us talk about routines. Routines reduce emotional randomness. Stable routines create stable behavior. Many profitable traders follow structured habits daily. Review charts calmly. Journal trades. Review emotional mistakes. Protect focus. These routines strengthen discipline over time. Now let us talk about journaling. Journaling is one of the most powerful psychological tools in trading, because journaling reveals emotional patterns clearly. Recurring fear, recurring impulsive behavior, recurring emotional mistakes. This awareness slowly improves emotional control. Now let us talk about self-awareness. Self-awareness means understanding your emotional patterns clearly, understanding what triggers fear, understanding what triggers greed, understanding what creates impulsive behavior, because awareness creates emotional control. Most emotional traders react automatically. Professional traders observe themselves constantly. Now let us move into mental frameworks that strengthen trading psychology. The first framework is probability thinking. No trade is guaranteed. Accept uncertainty calmly. The second framework is process over profits. Focus on disciplined execution instead of emotional money chasing. The third framework is emotional neutrality. Stay balanced during both wins and losses. The fourth framework is long-term thinking. Judge yourself over months and years, not individual trades. The fifth framework is capital protection first. Protect survival before chasing profits. Now let us move into practical exercises. The first exercise is emotional journaling. After every session, write down emotional reactions honestly. Fear, greed, frustration, impatience. This builds awareness. The second exercise is practicing pauses before trades. Before entering, ask yourself honestly, am I following my process or reacting emotionally? The third exercise is reducing emotional pressure through smaller risk. Smaller risk creates calmer decisions. The fourth exercise is reviewing losses objectively instead of emotionally. Look for lessons, not emotional self-destruction. The fifth exercise is tracking discipline instead of profits. Ask yourself daily, did I follow my rules? Did I stay patient? Did I control emotions? Now let us go even deeper. One of the greatest lessons from the disciplined trader is understanding that emotional consistency matters more than emotional intensity. Most traders secretly chase excitement, big wins, fast movement, adrenaline. But professional traders focus more on calm execution, controlled risk, stable routines, and this emotional calmness creates consistency. Now let us talk about emotional maturity. Emotional maturity means accepting uncertainty calmly, accepting losses calmly, accepting slow progress calmly. This emotional stability changes trading behavior completely. Most emotional traders react emotionally to every outcome. One bad trade destroys confidence. One bad week creates emotional panic. But disciplined traders think long-term. Now let us talk about ego. Ego destroys many traders psychologically. Ego wants to be right. Ego hates accepting losses. Ego makes traders hold losing positions emotionally. But disciplined traders think differently. They understand protecting capital matters more than protecting pride. This psychological shift changes trading behavior completely. Now let us talk about another important truth. Profitable trading often feels boring emotionally. This is difficult for many traders to accept, because emotional traders secretly want stimulation, excitement, action, adrenaline. But profitable trading usually looks calm, disciplined, structured, stable. And this emotional calmness creates consistency. Now let us move toward the final message. Trading psychology is not a small part of trading. It is the foundation, because your emotions control your behavior controls your consistency, and your consistency controls your long-term results. The lessons from Mark Douglas continue helping traders because they focus on the real battle in trading, the internal battle, the battle between discipline and impulsiveness, patience and emotional urgency, calm thinking and emotional reactions. And the traders who succeed long-term are usually the traders who learned how to manage themselves under pressure. They became calmer, more patient, more disciplined, more emotionally stable. And if you continue strengthening your mindset, your decisions improve. If your decisions improve, your consistency improves. And if your consistency improves, profitability becomes possible. And if you want to continue building that mindset, subscribe to Bull Mindset. I will see you in the next video. Thanks for watching.